This is going to be part 4 and the second to last video in this series. The last video is going to be a little bit of time and sales discussion, which is a little bit more difficult of a concept in my opinion to kind of just base on a video, unless I do like live execution on that, which is just not anything I'm super interested in. But the concept of time and sales, seeing that absorption play out, that path of least resistance play out, that changing of hands and whatnot develop on the tape can be a very good good opportunity, right? So these are going to be some of my best trades, some of my worst trades, right? We have those 3 videos discussing a lot of different concepts, a lot of context being important, and a lot of different scenarios, structures, like concepts within my system that I use that kind of define my edge. So this is going to kind of be that explanation and a grouping of all of those together, per se, to kind of explain the best trades I took, why I took them, and the worst trades, why I took those, right? So, it's going to be a tricky one to start, right? But I think I'm just going to go ahead and discuss some SPY and QQQ trades, right? So, obviously, the environment matters. Obviously the time frame matters and the horizon of a specific execution matters, and specifically with options, those matter a lot. As far as trades I've taken on SPY and QQQ, I mean, I've taken hundreds, right? I've taken hundreds all the way back to, when I first started out in June of 2023, I've taken hundreds, right? But some of them I forget, some of them aren't really worth talking about, little day trades, little speculative opportunities that I took. So I'm going to be pretty, I'm not going to be as thorough with every single one of these because a lot of these aren't really worth the time to sit here and explain a 5-minute accumulation and do an overnight gap. I'm going to be more thorough on the opportunities that I took, were built out over a couple of days or waited on for a couple of weeks or months, and then I executed and I was able to capitalize. So, as far as SPY goes, right, I will say that, the majority of the trades I took before February 2025 were not really the most lucrative. We're not really the best. I don't really have any strict examples of actual trades I took. I mean, I had some paper trades I took. I did try to short into the election, which was just a terrible opportunity. I misread the entirety of this range and timing, as I said. But I think what I'm going to begin with is this general range, right? I think I'm going to discuss most of the trades I took throughout from Q1 to Q3 of this year. And then I have a couple like AMD, like McDonald's and Tesla that I took a while back. I did take a Tesla trade that I took a while back that were good opportunities, right? So the first trade I took this year, that was a really big sized position relative to my accounts portfolio, and that was a high confidence execution, was the NVDA short, right? And I'm going to more than likely just discuss all of the NVDA positions that I took, throughout this range we developed since June of 2024, but was the NVDA short, right? So, dating back to March 8th, this was your kind of footprint following an aggressive gap on this report and kind of an extension, as I discussed with those parabolic opportunities, right? We had these exhaustive gap ups, the climax kind of building out, and then that Friday top being put in on another extensive gap. We had 1, 2, 3, 4, 5, 6, 7, 8 gap ups in a row, increasing volume. The spreads may be either getting smaller or larger relative to that volume changing, and we have that kind of parabolic top that I put in and discussed in part 2. So that was your first initial footprint on NVIDIA. This obviously happens after an extensive run from the 2022 bottom. At this point within this chart, from 2022 lows to March 8th, we were up 760%. Up to now we're up 1,500, which is insane in my opinion. But this was your first initial kind of sign, and then we had the obvious kind of risk on names lagging and the distribution on AMD panning out. And we had the kind of risk off sequence into April where the April OPEX bottom was pretty evident. We had a lot of bad news in the tape around this time as far as news goes and war events and whatnot. And we kind of bottomed out that April OPEX and see the rally, right? We see that summer of George happen. And this again, relatively similar to back here on a little bit higher time frame perspective. It's relatively extended and begins to just give you an unappealing structure into that July kind of OPEX window, right? Where we see July OPEX on the 21st, and that week we kind of began to see the exhaustive gap ups, the influx of volume, and or the decrease in volume, the effort and result not matching, also happening right off of a split too. I mean, in my personal opinion, a lot of people could potentially be attracted to a stock directly after the split, right? Especially when we go from, you know, 1200 to 120, right? People may be a little bit more inclined to purchase some NVDA, um, but that's a speculative ideology. So we had the exhaustive gap ups, that parabolic short on the 20th. I did take a short position this day, just an intraday move. When we have a 3% gap up after this price action with gaps left below and kind of reversion needing to happen, there's an opportunity within that range, right? Then we have the same kind of thing again, right? We have that breakdown, and then we have that internal higher low being put in, right? We have a gap that's defended from the 25th. We have the notable exhaustion from that seller, and this was a pretty 3 days. We made a 16% move, right? This is a pretty extensive breakdown with a lot of imbalanced area within this chart left behind. We had multiple gaps. We had a major liquidating kind of action on this candle with not real true digestion of it at all-time highs. So naturally, we're going to have to digest that area right within this chart. And that's exactly what happens, right? We see the internal structure. We see that kind of long opportunity developing. So I shorted this on weeklies. I had a pretty good gain on there. And then we see the digestion. We see that we see those gaps, that kind of effort and result not matching. Either a lot of result with minimal effort, or vice versa, a lot of effort with minimal result, right? We see, not a lot of volume backing a 5% day on NVIDIA, and then the exhaustive rally into Thursday, July 11th, where I'm willing to bet we had some data sets. And if I'm not mistaken, I did short this on bi-weeklies for a small little gain, nothing insane. And then we see the breakdown on Thursday. We see the kind of lower high put in and just no true bid and a buyer that bailed within this gap that we'd established on the week of the July 8th candle. And we see the, gap down on Tuesday. And I will say during this sequence, I was very short side focused on NVIDIA for obvious reasons, especially into this earnings gap and the gaps left behind. But my execution was a little off, right? If I'm not mistaken, I had a short position this day and I closed it before we closed out that session, and I missed on the following session, right? And so, I wasn't really. I mean, this was this was a year in, right? This was, I think my directional read was right, and I'm proud of that. But this was a year in, and I'm okay with, obviously not being able to capital. It's not even about the money; it's about the experience, being able to learn about this range and to see it develop. Even though I didn't really make much money, I had a good short here, I had a good short here. I didn't fully understand the relevance behind what was going on, and obviously I missed out on a good chunk of opportunities, right? But nonetheless, we had the gap down, we had the digestion, we had the weak bid off of an in-log that probably led in the data sets again, 7% session the next day, and then we get that kind of climactic low on the 25th where like, okay, we're kind of seeing a buyer. And then the short gets a little bit unappealing, right? Like I'm not going to try to short this. Obviously, we have a 7% day, and then we have the 12.8% gap up on the 31st. And this is when, volatility starts to get a little extensive, and the structure and directional read is shifting from long or short to long, right? Where we're, building out lows that are being bid, and it's just a waiting game for that April or August window. And then we obviously have the massive change to the hands. And then the subsequent higher low put in, right? And then kind of fake out print on the 6th. 7th is pretty important as well. Considering the fact that there's a seller, but we pull back into that discounted range. They're bidding it throughout the entirety, and then we get the pop and following session in the rally into the gaps left above. Right now, this was also a time frame as well that I'm very, very happy and okay with having traded and was completely wrong. Right? I was not understanding the extent and the relevance of what was going on within this range in August. The massive changing of the hands that occurred on the 5th. I wasn't as experienced with the windows and the Vanna charm flows and the supportive windows that we have within the equity market. And so, more or less, right, like I was just unable to comprehend why this was a great long. And, Yeah, I mean, I had a long position here, if I'm not mistaken, throughout these days. I cut them and then I started flipping short because I wanted to pull back to digest this print without just understanding, like this is this is notable, this is relevant, and we can long this in the gaps above at the minimum, right? And at the minimum of that, with how the structure is developing, right? And obviously we see that, and I was shorting every single day the whole way up. I, blew my port during August of 2024, shorting the entirety of this way all the way up into these gaps before we finally start to see that selling exhaustion. I just didn't understand and comprehend like what August 5th was. Like now I look back and it's like, I played August 5th terribly. I played April 4th and 7th, April 7th beautifully in terms of understanding the relevance behind what's going on within these charts and what's going on and why. Is pretty important, right? But we see the breakdown in the report in August and then the kind of high low formed. But what you notice as we rally, right, and as we make a new high above the June highs, the structure begins to stall and exhaust, right? We don't really see like a really, really clean high or low. This pulls a little bit deeper than where the golden pocket discounted premium area is. And then we rally to new highs. We form this kind of exhaustive top where, like I said, we see that breakout and that subsequent stall where there's just not really a true aggressive volume harmony developing at these new highs. And then we see the breakdown, the high low put in within the gap, and the rally into the report where that report, like I said, being that liquidating event and that catalyst, offered a large opportunity to change hands up here. Offered that counterparty fill for those orders looking to be from the sellers looking to offload up here on this report, right? And so this is where that price covered over time begins to develop, right? This is a 8% move in 108 trading sessions, which isn't necessarily the worst, but uh, relative to what's going on and the broader market as a whole within this range, we had SPY, aggressively above its previous highs that were established in July into November, right? You know, Obviously it's a little bit lower volatility than NVDA, but it's pretty important to understand the context, right? We see the breakdown, and this is where we see that previous buyer, right? We have that seller at this 130 spot, and we have that breakout above it, and there's that buyer kind of trying to pin us within this range, right? So this is just that floor of accumulation established within a distribution, right? So this is that 130 to 132 spot, right, where that buyer is present, and that's 1, 2, right? We put in what's potentially our lower high, see the breakdown into December. That's 3 lows, and then we see the internal higher low and the run up into that CES event, and then there's that kind of breakdown, that massive liquidating candle. Here's where the tape really starts to flip, right? The progression is really starting to lack from those buyers, and we see the fourth attempt throughout this range. To try to kind of build off of this 3-point range from 130 to 133. And at some point, that buyer is going to be absorbed, that buyer is going to bail, and that demand is going to be absorbed for a path of least resistance, right? In terms of this daily distribution, in terms of a higher time frame distribution developing. I will say the highest volume within this chart in the past year plus, ever since 2023, is the March 8th print. And that's something that I like to denote and preface. But this right here is the opportunity that I was really, really waiting on when we have, a session that closes down 6% from the highs, but it's a gap up to new highs and a 9% intraday move from highs to low of days that were closed at in a massive imbalanced candle. Um, like I said, with the kind of structure shifting and the tape flipping and the progression stalling, and we see the continuation lower into January 13th. That's where we filled the full election gap on SPY, right? So that's where we fill the full election gap. And then we see the rally on the broader market as a whole into another all-time high failure. Here's January OPEX. And when was January of expiration? January of expiration was the 22nd, right? So this was that window opening right here. This is um, this is the window opening. This is the January OPEX window opening. And this is your January of expiration the following Wednesday, right? And so we have that window opening for a short-sided trade. We have the, just denoting the structure and the way that the tape feels and the way that there's a passive seller already showing his hand on the 16th. we get this run up into kind of exhaustive gap up where we're failing just the bar by bar imbalance within this area and digesting the entirety of this move. And so this is where I took my position, right? I took two positions on the 24th off open with an objective risk of just in general the high of this candle for the April positioning. The 3 months out, targeting 130, about a 5 R to R. Because like I said, the draw should be back into this range. You can de-risk your position, and then it comes with being able to capitalize a little bit further down to 127, maybe 117, 18. If we break that structure and see a draw lower and that buyer is completely wiped, right? Like I said, here's that kind of change in character within the chart, right? And so I took a couple positions. I took some bi-weeklies that ran into the gap from that Wednesday session. And then I took some Aprils off open and I closed up 30% that day, right? And that's a pretty appealing move. We see a 4% breakdown intraday. And you have some leeway into the weekend, right? And I didn't have massive exposure relative to my portfolio because, you always have the opportunity for this not to kind of top out and digest this print a little bit into the new week. But I knew the window was there, and I knew the structure and risk to reward and targets and objective risk were there as well. And we know what happened the next day, right? Those puts ran about 340%. And then I took some rolls targeting like 113 or like 115, 116 off of the 130 spot intraday, and those ran a couple 100% as well. So that was my first, really extensively aggressive NVIDIA trade. That was still to this date the largest trade I've ever had, the best win I've ever had, and one of the trades that I'm pretty confident in my opinion, right? That I'm pretty confident in personally, and that I'm pretty proud of. I will say that, right? Um, and then what happens next, right? Well, we see this sweep of these lows. We see the extension happening, the short covering needed, the digestion needed to occur within this name and the rally in February where we have that broader market top put in on the 19th. We have the deep sea gap tool, a 17% gap where that seller is protecting the progression that he made. And this rally is based and propped up by flows under the hood that are not really, that are just supporting this and the just mitigation of this imbalance that's necessary, and then we see that larger seller again, right? And so there are a couple intraday moves I took here, if I'm not mistaken. But what I'm really focused on, and what I was really focused on into this range, is if we could get a lower high into the report, right? When we see this breakdown into the 25th, and we have the report on the 27th after hours, or the 26th after hours, I'm looking for an IV flush, right? And I'm just looking for one. We have a very imbalanced move with gaps below that should be pretty easy targets. Um, and that's all I was looking for, right? We have I discussed this as well, right? We have the breakdown, we have the lower high, and it's just all kind of aligned into the report, giving you a flush. We had the previous daily high, the previous weekly low, the previous weekly close. We had the 0.5 to 618 spot, and so that was just my entry off open on one DTE crush contracts, right? We had the lower high put in, we had the weak bid, we had the gap to fill, we had the lows to take out. Those are my targets, right? I bought Marches again, if I'm not mistaken. I think I bought April's, and then I bought one DTE's. And those both ran pretty handsomely. And I just targeted this gap, these break of structure, and then this gap that we had below. If I'm not mistaken, the one DTEs ran about 600%, and the other ones ran a couple hundred, as far as like Marches or Aprils that I took, right? And so, that was the IV flush lower high off of a deep sea gap fill within another window of weakness. We then see the breakdown, the continuation lower, and that's when the short-sided trade becomes a little bit less objective, and there's no real edge here. We have a major bar-by-bar imbalance from this report and need for some digestion to happen. And if you look at just the broader market perspective throughout this entirety of this range, we obviously see the kind of digestion needed in the gaps to be filled above, beginning on this March 10th kind of in-walk, where there's an accumulative structure throughout the entirety of that week, and we see a nice pop, right? And so leading into that week, we're obviously leading into the window of a little bit of more strength, right? We had the expiration for March on the 25th. We had the Fed meeting or the 21st. We had the Fed meeting on the 19th, if I'm not mistaken. Is that right? Yeah, the 19th. You're gonna need some digestion to occur, right? And that's pretty inevitable. So we see these lows put in. We see a notable buyer throughout this range. We get the gap up. There's still no true bid. There's still no true structure developing that's super appealing. And we have this new week opening gap on the 17th that fails us and gives us a 3.5% session the following day, right? And I shorted it off this gap on this day, on the 19th. I know that. And I think on the 18th as well. I'm just shorting it from like gap to gap because we had that Friday gap as well. Um, took a good couple of opportunities here, but the next opportunity that was really the best one on NVIDIA, in my opinion, was the lower high that we put in, right? We had the in-walk from the 14th. We had the window opening on the 24th, and we saw, a 3.25% day on, 230 million volume. There's no true bid behind this. We look at SPY and QQQ as well. This was when we filled the gaps, turned that previous floor on the election gap that we established in January into a resistance, and we had the exhaustion pretty evident into what is, an accumulative sequence building out, but needing those second and third lows that we inevitably got. But, nonetheless, needing those lows to be put in to be kind of mature throughout this campaign, right? So being long side focused throughout this range is fine, but as we develop this lower high and we take into consideration the broader market and what a lot of things look like, the lower high is pretty evident, and a continuation lower is pretty expected. And NVIDIA was a vehicle of mine along with XLE or XLF, and this was my objective risk, was this kind of in-wog imbalance, and we see the lower high put in on an hourly perspective that session. Um, we see this is pop we see to start the week. This is the breakdown. This is the lower high. I bid I think April positioning again about a month out, which was a little extensive in expiration. I could have gone a little bit shorter dated and just targeted the in-wog, but I went, April's, and we had a pretty clean move. I rolled some shorter dateds throughout this range, targeting the gap from the 12th, but pretty clean hourly lower high here within a broader context of a lower high in the equity market, with a gap to fill and then another gap to draw into. I shorted it this day again off of the overnight gap, if I'm not mistaken, down into the remainder of this March 12th gap. And then that was really it on my good NVIDIA trades throughout this range, right? Just the context of why I was short side focused here, right? Like, why was I short side focused here? Where, when, what, and how, right? Same with here, right? And just those things as well. Now I will discuss some of the bad trades I took on NVIDIA. Down here, after we put in this candle, after we put in this major breakdown of the report, I began to get a little bit cocky. I was up about 200% in the month of February, and I began to get a little bit cocky. I began to get a little bit like I'm him, and coming into the week of the 3rd, I had a very clear issue with the execution on some of these trades. As we came into the week of the 3rd, right, on SPY and on QQQ, I was kind of anticipating, especially coming off of this January 15th CPI gap, I was kind of anticipating, right, predicting that we would pull in the discounted lower high range, and I could short that again to a full, continuation lower for that last month's supply. Now, the issue with this is, even though we have a buyer on this Friday, there's nothing super crazy quite yet. So I came in on the 3rd, and I tried to long the in-wog, and then I took a big hit, right? So I got really long right here for a lower high. And I took a pretty big hit, right? And after I get long on the 3rd, and I'm very long focused on the 3rd, I take that hit, and then I start to flip short on the 4th, right? And so I come to NVIDIA, and I continue to try to short the whole on the 4th, on the gap down and lower high, even though on this session there was really no true seller. And I get eaten, right? I take 2 big back-to-back losses. And it stung me pretty badly, right? So, this was like a gap down that saw a really clean buyer and then an absorption of the overnight gap, and I just kept really aggressively shorting on a bi-weekly position and just got eaten up for a pretty big hit. So that was one of the worst positions I've built out. And just that window in general was pretty bad. And then we come over here, and this was kind of the beginning of the downfall for this general range. So we obviously we see the reversion trade, right? And that was something I was pretty content with developing, and I was pretty happy with how this panned out, right? In terms of the footprint off the lows, the consolidation, and then the continuation, right? But we developed these breakaway gaps beginning the week of the 12th, and then the stall developing in the week of the 19th, giving us this notable footprint on the 21st. We pull back to 130, and we have this report at the end of May. And when we're pulling into this range at 140 to 142, where we had that seller in June, we had that seller in February, we have the deep seat gap. There's a lot of relevance behind that point within this chart. And I viewed the edge following this report, right, where we had the run up into the report, we had the gap up, and the 7.3% move following that. I viewed that as a potential opportunity to trade us into these gaps below, right? And instead of letting that pan out, I try to front run a lower high, and I try to front run this so immaturely, right? There was no, like, I positioned very aggressively short bi-weekly positioning on the 2nd, and or 2 week outs on the 2nd, and we see, this aggressive pop, nice influx of volume. We didn't see like a very gross structure if you just go back on an hourly perspective here, right? Like there's a pretty weak bid, but then we see the pop on Tuesday, and I just keep adding into this position. We're breaking away from lower high territory. We're seeing a spark on that buyer's perspective of things, and there's no true structure developing. There's no true edge within that range, and it was just an issue with front running that lower high, anticipating that we would see the full draw to 132 and trying to time that top again, right? They obviously see the distribution kind of continue to build out above those highs. I took a really big hit here, and then I try to short it on the 11th off of these highs, looking for a draw into the June 6th gap. And then I get faked out on the 12th. We had this aggressive spike. We had a lot of volume trading at the 145 range. If you go to an hourly perspective and just looking at the tape in general, there's a lot of volume up here, right? And there's a large seller. And so I took that short position off of there, and we see this spike the following day, and the fade at the highs. And, we closed at the highs, but we had that vol up, spot up, energy spike as well. And there was something very fishy with that kind of fake out candle where they were just waiting on some news to really catalyze it. And we obviously see the gap down the following session, and we get that pullback into the June 6th gap. So got faked out there. Took another short position the week of the Fed meeting. Ended up breaking even before the Fed meeting, which was no issue. And then we see the 20th kind of give you that look, that breakdown off of 146. There's a lot of volume traded on this day, right? The tape was really aggressively heavy on the week of the 20th, on the week of the 16th, right? We saw a large amount of volume pouring in on the 18th spike. On the 16th, we had a massive amount of volume poured in there. We saw the failure on the 20th. I try to play that lower high off of the INWOG, and then I go pretty green here, right? But I really, once again, just at this point, I was maybe emotionally not in the best state to execute any trades. I kind of ignored the reaccumulation we had into this June 16th gap, and I was trying to short this from here all the way to like 140, right? And so I go super green, I trim some like 50%, and then we rally and we see this really nice influx of volume. This is when SPY bid that 593 range, and we see this pop and higher low put in, and there was just, no reason to try to hold a bi-weekly position looking for anything further than that INWOG where we have the preliminary signs of a buyer starting on the 18th and then on the 20th and then off of open, and then we take out those lows, and I'm still short, even though the context of where we're at within a lot of names is um, um, wasn't necessarily super bearish, especially in a window where we still had the quarterly expiration to get by, right? And so I just got faked out here and just didn't. I just wanted this to happen. I didn't see that it would happen. I wanted it to happen, and I kind of forced a trade that went from green to continue to hold it and then re-add into a position that was a winner and turn into a loser, because I wanted to pull this back into this gap even further, even though the signs weren't really there, and the signs were definitely there that we would kind of revert a little bit higher. So that's a pretty bad scenario there. And then now we have this UTAD being put in, right? We have this aggressive volume spike and the spreads and aggressive effort, and then we get the subsequent stall as that breakout to new highs happens. This is a UTAD being put in. There's no true structure. There's very small, exhausted candle spreads and a very aggressive influx of volume on a 4% session that closes like this. I think this is putting in a parabolic top, but I was just too early here, got faked out here, and then didn't comprehend the relevance of what was going on within this range. But it was also a lot of it was my fault for being a little bit emotionally having a little bit of an issue with just what was going on as a whole within that range, right? I was trying to time the top way too aggressively instead of realizing like, okay, maybe I just have to cut this and try it again. Just little things like that, right? We front running this lower high was terrible. We had no true structure, no true risk to reward, just bad ideas. So that's a video. I had some good trades. I had some bad trades. I had some okay, decent trades, and that's just the way of how it goes, right? It's just how it goes. You have some good trades, you have some bad ones. Did I learn from the good ones, or did I learn from the bad ones? 110%. This range taught me a lot. This range taught me a lot. I ended up smacking a really good reversion trade after that, but it is what it is. This range taught me a lot. Here's the thing, I wouldn't have had the success I had in April and the relevance and edge that I had in April, even though it was not as much as I wanted to, but that's another time. If I didn't have my mistake in August. So there's that. SPY, I'm probably going to just go through a couple of these pretty quickly. So SPY, right, we had the top put in the 19th. I know I took some shorts off the in-walk from the deep sea gap on Friday, the 31st, but nothing insane. And then I think I did the same on the 7th of February. I know I was short here, and then we see the gap down in the CPI, and I didn't cut. This was kind of a fake out, and we were still in that window where that kind of true UTAD could be put in. We put in that true UTAD. We see the breakdown. I know I shorted it here off of the Michigan inflation. We had a pretty exhaustive scenario on QQQ, if I'm not mistaken, off of these highs, and I took a good short there on some 3 DTEs or 0 DTEs, if I'm not mistaken. But like I said, this was when I got a little bit poor in my execution. I thought we could see the gap fill, and I thought we could see a true reversion of like the 600s, low 600s, and then we would see that pullback to taking out these lows, and we didn't. I was long, and then I flipped short NVDA, and so started off March pretty poorly, right? But I ended up coming back on the 5th and the 6th. I smacked a good long off of QQQ on 492. Right, and some good intraday positions the 5th and the 6th, right? Then leading in the 7th, we put in this pretty notable buyer print to some extent, but nothing clear just yet, right? We had this gap below from the 19th, the day after the Fed meeting, and we just didn't have a clear bottom being built out yet, right? But the following session, we have the March 10th in WOG. This is when I started to make a handful of mistakes. We had the March 10th in WOG, right? We were pulling in the September 19th gap at 561, and I just began to slam some Junes, right? My ideology here was that we could see a pullback to 576, and then we could see that lower high put in, right? And I was just too early, right? We had a notable cumulative day within the 10th. I'm not going to go back and look at the 5-minute. We had a very notable buyer passively bidding it the entirety of this day. We had a gap down that swept those lows. We had a buyer during this session as well. I added in June's too early. I cut at low of day here. I took a big loss. We see the CPI gap up. We put in an internal higher low, at least I thought we did. And I was just absolutely bidding a bunch of 3 DTEs and 8 DTEs or 9 DTEs, right? The following Monday and the following Friday. And took a pretty big hit on the P&L this day, took a pretty big hit this day, and it was just two bad sequences here where I understood the relevance behind the base we were building out. I had time on my position that I started out on the 10th, but I started adding it like 564, and then when we were low of day here, I'm down 30%, and then I cut it and I flip long on intraday, targeting the in-walk, and I have too much size on too short expiration on a structure that's long side focused, yes, in this gap, especially leading into OPEX the 21st. The window was there, but I positioned incorrectly, and then we see those lows taken out. QQQ ends up being a really nice long into the 2% session we had on Friday, and I chased the longs at high of day, taking another loss. So this was a minus 3% Monday, minus 10% Tuesday, minus 10% Wednesday, minus 10% Thursday, minus 10% Friday type of week, the week of the 10th. I had a couple of other bad trades on Nike as well that I'll talk about. But like it was front running that, not allowing myself to be patient with the sizing, and then slamming the shorter dateds, and then missing on the opportunity and trying to add in and long it again, right? And then obviously the next week we have a pop, we have the higher low put in. I know I shorted this day on Qs for a pretty nice gain, but I didn't long the higher low, right? Like we had the exhaustion, the stall, we had the higher low put in, a very notable buyer throughout that session in the Fed meeting. Had a nice pop the next day. I ended up trying to short the entirety of that rally off of the Fed meeting, right? Trying to time the entirety of the top and taking a pretty big hit. And then I don't think I did much on the 20th. No, I actually did. I took a 10% loss in the port, trying to time the top again, right? And so, pretty big mistake during this entirety of this sequence. We have the gap down on March OPEX. I didn't do anything this day. And then I had my shorts on NVDA and XLF that paid pretty nicely, and then the reversion trade. But this was a bad sequence. This was a bad 2-week period for me. Just not understanding the relevance and the time frame, not adding in correctly and taking the additions on the positioning correctly. Just poor execution overall, and a great learning experience though, because like I said, I was able to capitalize on the short, be patient, not front run this, not get aggressive on this, and then trade the reversion. So we see the exhaustive gap up. We see the stall within the NWAG in the 576 range in the January 13th low. The breakdown, I was short NVIDIA and XLF this week. And then, I covered all my shorts before Friday. We see the new week opening gap down. This is where that second lower low is put in my opinion, right? That second lower low is put in. And it's just kind of like, hold on, I want to be able to separate this. I want to be able to separate this by timing. It's one of those things. It was just like, this was our second low put in. We had the end of quarter and end of month rally. It's March 31st. But this didn't give me the most appealing look. And I, said before, I was pretty confident that a massive changing of the hands would happen. Just because of how this developed, right? We had 1, 2, 3, 4, 5, 6 gap downs before the Liberation Day event, 7, 8, 9, if you add those. But the way that this developed, we didn't have like a really clean buyer, right? We had a nice sweep of the lows. I didn't do anything this week at all, right? I really didn't do much except for try to take some longs on Thursday, take a little small loss, but I didn't do much in the terms that I wasn't super confident in this being our bottom. I didn't want to trade this day, which was a bad idea. I should have taken the long opportunity to the NWAG, like fucking not a pussy. But I just wanted to wait for that potential spark and change of hands. And that's exactly what we get, right? And that's exactly what we get. That's exactly what I wanted. And I smacked it. And then I fucked it up, right? We see the breakdown the third, 5% day. We see the changing of the hands the fourth, right? This is very similar to August 2nd, where we, the day before those Vanatron flows, or the session before those Vanatron flows pop in. We have that kind of, that selling, right? I always like to say, if you're selling or buying off that news, you're too late, right? If you're buying off the election like we see in 2024, you're too late. If you're selling off the tariffs, you're too late as well, right? We were already down 12% from the highs. Into April 7th open, we were down 15% from the April 2nd closure. We had the changing of the hands happening on August 4th. I obviously was very surprised that it happened to this extent, but we see the gap down, and then at this point, anything and everything can kind of catalyze that big spike in vol. and we had a very, very large buyer. And I traded some April 17th calls here, right? And we had that similar fake out print to the August 7th day, where it's that kind of absorption of supply. I did short this, wasn't anything insane. And then this is where that vol VIX kind of got into my head a little bit. I built out Junes on the 8th, and they were down 14% in the close. I cut them, and I just bid a bunch of TQQQ, right, which is just 3x leverage TQQQ. And yeah, I got a nice 30% gain on that. But I didn't want to play options because of VIX. And I wanted to wait for CPI as well, right? Obviously, this was insanely historical, but I just, this was the fake out print. I should have been ready. I should have had those options ready. This was one of those things where I think the whole point of trading is find things you're very, very confident in and slam them. And I was very confident in this, and I slammed it, but I didn't slam it like I should have. I really didn't let this reversion trade and then the continuation make my year, make my quarter. I had a really nice return on it, but then I just didn't, I just didn't capitalize on it necessarily how I should have, right? I had a really nice gain here, and then I didn't, let myself build out those Junes and really capitalize on, a couple months of time. Obviously, VIX could crush those contracts, and so that's why I was a big proponent of this trade was the TQQQ exposure. But, I guess hindsight's 2020. I think the better trade here, options wise, was throughout this consolidation, and throughout this higher low we put in, right? And this is where I personally kind of started to fuck up, right? We see this massive footprint. We see the gap down the following day. There was a climax intraday here. I tried to time the bottom. I gave back a little bit of the profits from the 7th and the 9th. And came into the following week. I didn't do really anything the 11th. Came into the following week, pretty long side focus. I know we gapped up. We failed the INWOG, or we failed the gap down from the 10th. I shorted the INWOG. And then, for some reason here, I was very bullish. Not for some reason. I was very bullish. I tried the long in the overnight, or the INWOG. Didn't end up working out. Great. I tried the long off the progression gap. I ended up cutting those. And here's the thing, right? This was a short week, the week of the 14th, an OPEX week after a historical sequence where we already don't see a lot of effort from the sellers, right? We see, a 4.3% day where that's a nice wick coming off the August 5th candle's low. We already don't see a lot of effort from those sellers, right? And then we bid the progression gap, and I just don't even take the position. I wanted to wait until next week. Sweet, right? And then we see that accumulative sequence on the 21st, just a very passive buyer underneath these lows and the August 5th lows, and that shakeout in the collection of inventory, and I just didn't long it. I longed Macy's, and I just took a bad long. I tried to short, QQQ. I talked about that. I tried to short QQQ on this day into the gap instead of just taking the progressive reclaim off 438, right? I took the longs. I didn't see the closure I like. I opted to not long this continuously and to wait for a pullback into the gap. But just the relevance behind how mature and aggressively bullish this structure is with a lack of effort behind those sellers, right? I should have just long that 438, covered into the gaps, and then, built out that short like I did, and it just didn't end up panning out. So that was a bad time for me, right? And then we begin to see that kind of micro distribution begin as we, pull back into the remainder of the April 3rd gap. I ended up taking Qs here because we had filled the April 3rd gap. We took a pretty nice short on Monday and Tuesday, covered half for about 50%, and then broke even on the rest as we had that end of month kind of squeeze and the reclaim of just this resistance, right? And this is one of those things where it's like, I'm not buying options here, but the shares trade is completely still valid as we consolidate within this range, put in that internal higher low, and continue into the Meta and Microsoft reports. But I'm not buying options off this. I don't care enough to do that. I wanted to see if we could get a true pullback into the May flows that came in on the 5th, and we didn't get that, right? We didn't get that. So, well, that's like I said, there were a handful of opportunities here. I think that this was the best one, this consolidation on a lot of names, commons and leveraged wise. I think that April 7th and 9th were two good days. There was a clear edge and a clear reversion that was necessary, but a little speculative in terms of really bidding options with fix at 50-60. But that subsequent consolidation after was beautiful. We have an opportunity to take a lot of names on shares off pivotal points within the chart. Google was a really big one, off of 140, off of a gap from March of 2024. Apple off of an earnings report gap from May of 2024. Microsoft off 350, those 2021 highs. NVDA off of the $80, $85, $86 range, right? A lot of important charts and names that you can buy on commons and on leverage ETFs that you can really ride all the way up. Me personally, I just didn't capitalize on this like I should have, right? And then trade the short. I talked about a lot of these trades already. I'm not going to go through, continue to break. I talked about this short that I took here. The Moody's gap down, the OPEX of expiration. We see the breakdown. I gave back that profit. Trying to short the progression gap instead of, just handling this position correctly, right? I had about 20 puts that I had built out up here, and then I covered all of them, here, and then I just broke even on the rest instead of holding them. And I ended up, instead of building out the position, covering a good chunk, covering the half of the half that I had left, and then holding the other half of that half, the other last quarter of that position over the weekend that could make the trade with a risk-free position. Essentially, I covered all of it, didn't get to capitalize on that gap down, and then took new risk over the weekend and ended up giving it back, right? This is where I began to kind of have some errors with my execution. I shorted during this week. We didn't see much. I broke even. I took a small one and broke even, right? That was the court ruling on the 28th that faded, that entirety of that move, and we pull back in the N1, but we see a buyer on the end of month flows from May. This is where I shorted NVIDIA, gave it back, or not gave it back, took the L, shorted on the 4th, and on the 5th, was up about 25% on July's. And then we see that gap up on the 6th. And at this point, I was fully ported in there. Swung over the weekend down 16%. We see the continued exhaustion into CPI. I cut my position for minus 40 at a high day on CPI. Reshort, go really green. I had a really nice size on QQ or on SPY and NVIDIA. This fake out print with VIX up 4%. Energy looking really, really nice. And we have this closing at the highs where it's kind of this like fake out candle and waiting on something. We see the gap down the following session. Didn't capitalize on the draw on the June 6th gap. We see the lower high put in on the new week opening gap up on the 16th. The buyer bailing through 597 and the accumulative sequence within this that led to the rally, right? We had the two lows attempted on 20th. I tried to long this on some 0 DTEs, took a pretty big hit. It was just a stupid trade trying to anticipate a rally and the close on the expiration. We see that news spike the following day, and this was where I got faked out on NVIDIA, and now we're building out this distribution ever since. So yeah, that's really the bulk of my SPY trades and QQQ trades, right? Just kind of breaking it down, like I said, I longed it here on Qs. I took TQQQ here, and this was the best long. Off of these lows, and then they reclaim a 438, then we rally to 457, and then we rally all the way to 470s. This is such a clean long, and I took that starting position on the 16th on June's, and I just cut them and didn't add anything on the 21st long exposure except for Macy's, fucking Macy's. And I was just locked out. I could have smacked a pretty nice move on the indexes on June's, and I just wasn't able to. And it is what it is. This is a pretty ugly 5-minute candle. It is what it is, right? Hindsight's 2020, but yeah, beautiful opportunity. Personally, Tesla. I've had a couple good trades on Tesla. The first one that I really want to discuss is this reaccumulation we had back in May of 2024. So this was a name that was building out climaxes, right? We had the rally off the 2023 lows, digesting this move from COVID to, from 20 to 500, 400. We have the leg off 2023 lows, the higher low put in, the continuation. And then, as we develop this range, it does, in my opinion, give us that kind of climax build out throughout here. This was a pretty notable low. This was a pretty notable low of this report in 2023, in the year rally. And then this underperformed substantially in the 2024, where we had that report and the failure within this gap, leading to the continuation lower here and then here. right? But this was, in a pretty important spot, right? We had an earnings gap from January 2023 being filled. We had these April 2023 lows being taken out. And we were developing this climaxes already, right? There was nothing necessarily super, super clear quite yet, but we had this climax on the 18th of August. We had this report kind of give us these notable buyers. It sparked a nice leg. Same with here, but nothing notable yet. And then we see, right, this aggressive breakdown into the report in April, right? And this is where the spreads get very, very small. This is where the volume and the effort and result don't necessarily match, right? There's not a lot of effort being put in, but we're seeing that result from sellers. There's kind of a divergence going on here where there's a bidding of this supply and this selling happening. And there's a passive buyer waiting on something, right? Denoted by the small spreads as we continue lower, right? There's a buyer that's found interest in this. We see a 12% gap on the report, and then right after we see a bid U full self-driving news in China, 15% gap up, right? And so that's from 138. It's a 43% move in less than 10 trading sessions, right? And you can denote that by kind of the exhaustion underneath these lows, the hands changing, that selling getting absorbed, that selling effort not seeing that result that you'd normally see, um, and something like that. Um, and you see the leg that stems from it, right? Uh, and then we see here, right, this consolidation, right? We have two monstrous gap ups of 50% move in Tesla, and we see that consolidation developing um, throughout this range, right? We see the first attempt on the gap result in a pretty nice leg. This kind of failed. We had the attempted higher low the next day, and then the loss of that print, and the continued kind of exhaustion, like passiveness from buyers until we take out these lows. We see a really clean pop, and then here's where that internal structure developed. Here's where that last point of support is developed, and you'll see your draw to maybe $200, right? And we see a really nice spike off of the gap that we established on the 13th. A notable seller, and then a nice spark the next day, and then the 3 days of inside bar action in the week of the 24th. This is where I begin to take my position, continue to hold my position. Saw a really nice rally, cut it all. I barely had enough room, or I barely had any exposure, and I wasn't going to hold this whole way up. Obviously, commons are phenomenal, with like 170 being your cost basis, targeting 200 to 207 to maybe, 260 is insane. This got so parabolic. But it's one of those things. The internal structure, the changing of the character, and then you have an opportunity to long the internal inside of an internal inside of this structure and rally this to break the structure. But pretty good long if I do say so myself. Right, this was something that if I could go back on, I would have slammed commons at 170, and I would have slammed a fat position within this print, and I would have actually capitalized a little bit more. But really good move in my opinion, and I'm pretty happy with it. I longed it here. I took the path of least resistance, but this wasn't anything crazy. It was a pretty small win. It actually was pretty sick, right? This was just the, notable footprint on the 5th, the subsequent higher low put in on the 9th, the rally, the consolidation underneath this bear gap, and then the breakout and 5-minute higher low off of that. Right off of that 332 spot, I longed this. I covered it all. Why here? And those ran pretty extensively, so I don't really want to talk about that. Wait, hold on. I'm kind of realizing that I've taken a lot of trades, and it's difficult for me to go over every single one of them. But I'll try my best, right? This was the XLF short I have, right? We had this previous kind of distributive daily sequence. We had the broader contextual weekly distribution on XLF. And it was just the aggressive 10% breakdown from March highs to March lows. The lower high put in on a weak bid, kind of relative to the broader market, outperforming, but more or less digesting and mitigating this breakdown and bar by bar imbalance. We see the notable exhaustion on the 25th, aligning with my thesis. Aligning with my thesis on, the broader market when we put in that lower high. This was a notable potential execution spot on XLF. We saw a pretty nice return on some Aprils. I ended up covering all of them for, only about a 2% move. I didn't even let this trade in the full in-log on the 24th. And the thing about this trade is, like, you can tell with this mitigation and weak buyer, and then we put in a really, really ugly weekly close here. You can kind of tell that we're going to break structure, especially because we never pulled into the full election gap here. You can tell, but I covered the majority of my position for like a 60% return, and then we see that lower high. Like I said, this was another red flag that I was not really a fan of this long opportunity being, sticking in the beginning of April. And then we see the massive changing of the hands that occurs, right? But, it's kind of one of those things just like, man, I was pretty confident in this lower high pulling us down to sub 47. And I covered it all, and I just didn't re-roll it. Obviously, it's a little speculative in hindsight into an event like that, but it's like, wow, like, okay, that was pretty insane. That was a pretty good trade, and if I would have bought, I mean, I had April's, like, that would have been a pretty good trade if I covered some and then held it, but I just feel like it's one of those things. It's like, I can talk about in hindsight how this was a phenomenal short to that break of structure, but I'm never going to get that opportunity back. It's one of those things that's just kind of like, um, but it was a last point of supply on this name with the draw being lower, and that's what we get, right? And I executed here on this lower high. Obviously, in hindsight, I would have slammed this a little bit more aggressively and continue to hold a little bit of that position into the potential break of structure, but you can't really do anything about that now. Schwab was a good one, right? I've talked about this. This is a distribution on a weekly perspective, and then we're building up this distribution on a daily perspective where I think we're putting in our UTAD right now for a pullback to sub $60. But more or less, just I executed within this range. We had the climax off the report, the run up on the election, and then the kind of hourly distribution developing in late November, the aggressive breakdown into the election gap being filled, and the rally on the report where we build out another kind of daily distribution here. And we see some historic volume pouring in in mid-February, right? The highest volume we've seen in a while on this name since the bank crisis in 2023, and before that, since 2011. Probably 2008 didn't have more volume. But we see some historic volume pouring in on this print, and you look at where it closes and where it closes at, and you can kind of understand that there's a large seller within this range, right? And we had this peg right here. Basically, all I did here, I mean, this wasn't even like the best trade. I didn't like load in on this lower high right here and trade this into the peg. I really just took like the lower high in here, covered it, took this, covered it, took this, covered it. Like, I just shorted this a handful of times off of this, what is kind of our lower high that we established on the 21st, right? Then you consider the context of the broader market top being on the 21st, and that was a pretty decent one. But one of those ones, the bank short being up here with this earnings gap to pull into, I really could have slammed this a little bit more, covered some, and then we had that fake out print on the 28th where we continue to see lower into that full peg, but nothing more, nothing less. It was a decent one. I'm kind of trying to go through this a little bit faster now, which kind of sucks, but I'm already an hour into this video, and I really don't know if I'm going to want to talk about all these. Gold was a parabolic short, right? This was during that kind of time where everybody was really fearful in the markets. during that kind of time where everybody's really fearful in the markets, right? We had that notable sequence in April, and then we had the rally in gold as we digested that range on the equity market. And this was just an extensive. I mean, this was just a parabolic short one-on-one, extensive gap ups, influx of volume, but nothing that you can really time, right? I took a pretty big hit trying to time it here into here. I took like a 40% loss. And then we see this print, right? This is very exhaustive and aligning with the April 21st print on equities. Aligning with the April 21st print on equities where they're being accumulated, we see an opportunity there. And then actually that session as well, we had the run up in gold after hours, right? The notable selling happening after hours in pre-market. I took the gold position here. I was looking for 305. I took May exposure, but I took a week later than May expiration, right? So I took May exposure looking for 305. We go, 2% move intraday. We had, some 5-minute structure. I'm not going to go break down. Necessarily don't need to, but this was a good parabolic short. This is the highest volume we've seen on gold in years, right? Since 2022 top. And it aligned with everything. And this was a very ugly daily candle closure. We never had that footprint beforehand, so that's why I was pretty early here, but we had that footprint now. And I genuinely chose the worst contracts I could, and I didn't end up making, I only had a 20% return on a 5% move on gold. It was insane. I can't lie, it was insane. It was genuinely insane that I only had that kind of return on gold because I chose the wrong expiration. I really don't want to talk about that. It should piss me off. TSM was a good one. This was another distribution that I think began in March of 2024. We had the lack of any lower lows. We had the notable volume at the higher highs. And we had the kind of UTAD put in, at least at the time, in DeepSeek, right? We had the attempts to mark this up, right? The August 5th print resulting in a rally that was met with an influx, I think the highest volume ever on that report at the time, at least. And this gave you a larger seller, a pretty ugly closure. We had the attempted accumulation with the higher lows internally built out into the breakout of all-time highs where we saw a very aggressive seller. Then the run-up on the report where we see the 13% gap down off the DeepSeek and the notable seller and historical volume pouring in as well. We then saw the digestion of that gap with no true bid. The gap down the following week where there was digestion of that, and we saw that kind of lower high put in. And all I really took here was the path of least resistance through 197, right? We had this floor put in on the third where the buyer resulted in very little fall through. And that second attempt to mark this up on a lot of news on the 14th, met with a notable seller, attempted again, and we see a gap up, and then we see the gap down the week of the 24th and a lower high right off of that range. Was just kind of targeting that gap that we established in the DeepSeek candle lows. But essentially just a weak bid. This was another one that I didn't really let make my month, make my quarter. A pretty high confident path to these resistance. I took March 21st here, and then I ended up covering them all. I took some shorter dated this day as well, looking for that new low, but I ended up covering them all prematurely. Not necessarily prematurely, right? Covering them all at the deep sea candle was fine, but then we put in this lower high on a very weak volume into the NVDA report, and obviously I shorted NVIDIA and that was great, but this was a phenomenal opportunity to continue to trade this to the full gap fill from December 2nd. So a path of least resistance, but a lower high that was missed out on, essentially. What was TSM? Um, Nike was one where it was another. It was another. It was just a failed breakout, right? Um, right. So we had the cumulative sequence on Nike, right? This was a name that put in a historical amount of volume off the July report. Um, we had the historical amount of volume put in on the June report, on a 20% gap, and this was in the cumulative chart, right? This was a name where you just look at the daily chart, we see the climax being built out, we see the nice reaction into the gap, and then we see the two lower lows put in, right? Where these lows are relatively weak as far as progress wise goes. As far as progress goes, right? A 3% new low in 138 days sessions. And the influx of volume, a notable leg that happened after, right? So we see this leg, and we see this $80 spot where there's a previous notable seller within this range. Um, where there's a notable seller within this range, and I thought that we could see a higher low put in, and we could see a run up to 85, right? And so March 10th, we see this very nice pop. We see this outperforming, S&P 500. I take that position on a higher low, right? And then we lose the higher low. And then what do? I cut it, and then I take June's. I try to take June's here for a run up into the report, which was actually 2 weeks away, less than 2 weeks away. And so I try to front run this. And then I swung it on a poor daily closure, and I took a really big hit as we pulled back into the gap. And it was just a bad trade on a bad closure, trying to front run what was not really a nice bid, seeing some follow through. So that was Nike. MU, I didn't really trade this much. I tried the higher low here. It was not the best structure. And McDonald's, right? This is the last one to talk about. McDonald's was one I'm pretty happy about, and this was one of the trades when I was kind of first starting out that ended up hitting pretty nicely, and I had a pretty good couple of returns on two separate expirations. On two separate expirations, right? We have McDonald's. This was a name that in mid 2024 we were pinning off of the 2023 lows. We saw a notable buyer following this kind of quote unquote double top where there was just a stalled all time highs and a digestion of this, 30% rally that was pretty necessary. 22% rally, 23. And we begin to see the kind of preliminary signs of a climax building throughout here, right? As we pull deeper than discount. We have the kind of exhaustion here off of this April 5th volume anomaly. A nice leg, a report that's bid lower and sees pretty clean progression. An internal higher low that's attempted here that results in a failed breakout above those highs. The massive one-sided kind of liquidating sequence where that potential for those hands to change kind of starts. We see a nice leg after, and then no real appealing higher low. We finally take out the lows that we established in 2023. See a clean pop. The markdown quickly into the report, right? This is one of those IV flushes where we see the bid lower into the report off of some news, there's consolidation, and then the flat open. The very clean rally into the report, the pop, the internal two low accumulation off of this earnings candle low that we established, right? So this was a decent little intraday long opportunity. And then we see the continuation that Friday, right? Where now it's almost due for a little bit of some digestion, right? And look at the date, right? Look at this, August 2nd. Compare August 2nd and compare this sequence from July 9th to August 2nd on NVDA and on QQQ and SPY. It's completely night and day because you're seeing these laggers, this name that was relatively lagging, have money rotated into it, and when it's outperforming when we have NVIDIA, those profit takers and those sellers showing their hands in June to August. See that same thing happening on McDonald's, just the reversal, right? We see that money rotating into here, and this kind of being an outperformer during that window, right? We see the consolidation. This was pretty clean, but we didn't have anything insane yet, and then I took that position on the 12th on a 2-week outs. We see the pot, we see the inside bar, and then we continue to rally. And I'm one of these days I know I took some shorter expiration, and this was a really clean move into the break of structure. I covered it all the 16th, and then we see the nice pop the next day. But a really clean example of internal structure aligned with external structure, relevance of where we're at within this chart, and the character changing on a daily perspective. We never had a clean macro lower high, and rotations, right? This was a time, right? This window in August, we had really good reversals on J&J, on Pep, on McDonald's, on Nike, right? Look at Nike back here. We had a really clean outperformer in Nike and McDonald's and all these names because these are these beaten down consumers that are having that money rotated into them. And we're seeing those outperformers in this sector because the money rotating from the leaders is coming into these names, right? It's usually that risk on / risk off environment. But that's the bulk of my best trades, I will say. I feel like I could do better at explaining these, but that's kind of the bulk of my best trades personally. I talked NVIDIA, I talked SPY QQ, and my worst trades as well, right? I talked the March mishap, the mishap that we recently had in June and July, but Tesla, XLF, Schwab, gold, which would just piss me off. I don't even like talking about gold. TSM, which was one that I was really confident in, but didn't really like just things that I'm confident in that I traded. But what did I do good? What could I have done better? I look back at August or at April. What did I do good? I was on the right side. I waited and I slammed it underneath August, or in comparison to August, which I was on the complete right side, and I didn't comprehend the environment at hand. But what did I not do good? Well, I didn't roll it. I didn't trade it again. I didn't really capitalize on the ninth as far as I should have. And I didn't trade the continuation, and I tried to short the whole way up. So, getting better, learning from your mistakes, looking at what you did right on the wins is all it is, right? So hopefully this was a little bit informative on aligning all these thought processes together on, progression, structure, options, timing, windows, gaps, liquid range, liquid highs and lows, changing the hands, manipulation, earnings reports, news reports, right? Just things like that. Hopefully this was a little bit more informative with some actual examples of real things that I've taken in real time. So yeah, pretty much it.